We're going to change gears now and welcome Ashok Kumar, Managing Director at LKW Investment Advisors, for our fortnightly appointment with him. Ashok, thanks very much for joining us on NDTV Profit this afternoon. As always, it's great to have you. Today is a good time. We're talking about tax reform. Let's talk about IPO market reform that is on the cards and underway. I just wanted to start with the essence of the benefits that will come from the fact that listing time has been halved with effect Jan 1, 2016. Your thoughts?
Yeah, Manvi, I think this is a huge positive for the IPO market. The IPO market isn't very vibrant at the moment, but sooner rather than later, you'll see the market kicking off. And at that point in time, I think these positives that Sebi has announced would come home to roost. So just to give you a historical perspective, you had a 3-week listing, which was 21 days, which was brought down to 12 days. And now that is being brought down to 6 days, which is, a huge positive. It, for all practical purposes, would kill the grey market operators, which, the overhang of which was often seen in abnormal prices on day one of listing. So, a big problem that was there in the primary market when it was transitioning into the secondary market, when a stock was transitioning, you saw abnormal prices on day one, which is, I think that would soon become a thing of the future, unless, of course, the stock is really hot and, in great demand on the day of listing. So artificial demand would get out of the picture. And that's, one very big positive that is there. Besides that, there are a slew of other announcements which could have far-reaching effects. The one that I see as particularly pertinent is the one with the offer for sale of the PSUs. The norm was that you could, you had to announce your price 2 days before actually making the offer for sale, 2 market days before, which facilitated great manipulation of hammering of the stock downward so that the offer for sale became that much weaker. But now with Sebi having relooked at it and accepted some of the requests of the PSUs, that it be 2 banking days, you can bank on the fact that most of the PSU OFS would happen on Mondays, because you choose a Friday and Saturday that are working Saturdays of a bank, and you do the issue on Monday. You don't leave too much room for price manipulation in the market, with Saturdays being shut in the market.
Okay. A couple of other details in terms of IPO market reforms that have been recommended by Sebi, just in terms of the fast-track route as well. Can you just detail what that, brings in terms of benefits to companies and potentially to investors?
The fast-track route, there was a cap of about 3,000 crores. You needed 3,000 crores of public shareholding to go on to the fast track. That has been brought down to 1,000 crores. What do we mean by fast track? It means that several of the documentation and disclosures that were required, and many of these disclosures that are actually pertinent to first-time issuers who are relatively smaller, and the transparency is believed to be less. A lot of those have been done away with. So you will see bigger companies being fast-tracked into the market, which again is a positive, because I've interacted with a lot of promoters who say that the process is painful, which is one of the reasons that they kept deferring their issues. And you would see all these people getting back into the market. I watched your discussion on GST a few minutes ago, and if GST is passed, I think you would have a vibrant IPO market for sure in 2016.
So a couple of factors that will actually affect the vibrancy of the IPO market. One, of course, is the administrative reforms, and those are already sort of underway, as Ashok has detailed by market regulator Sebi. The other is the sentiment piece of the puzzle. And when you have things like GST falling into place, I think markets in general are more confident, and therefore the IPO market also picks up steam a little bit. One final thought on, the reform, the structural reforms that Sebi is looking at. This whole idea of creating an institutional platform on stock exchanges for startups. Now, since startups are the hot word out there, hot phrase, Ashok, is this essentially going to open up funding in a much more organized way for startups?
Yes, it is. I think it became fairly clear to both the Finance Ministry and Sebi that most of the startups, because of the norms we have here, were choosing to list abroad. Many of them are loss-making businesses. They are really focused on the top line rather than the bottom line, and that does not augur well for their pricing in the Indian market. So, which is why this is a fairly smart move again by SEBI to allow them an institutional platform. One would assume, or at least the presumption is that the institutional investor can, look a lot more into the future than the retail investor, and to that extent, you might actually see. Some of them considering a listing in India rather than by default going overseas, which is a positive. But, just to further extend that point, I'm a strong advocate of, the institutional platform being open for all issues and retail investors actually participating through the mutual fund route. Because it's a very small portion. It's a portion where retail investor can potentially get hurt. And, where the issue is good, they hardly get any allotment. So it's a kind of a chicken and egg situation for the retail investor. My personal opinion over the years has been that they're better off participating via the institutions or the mutual funds.
Okay. Just to summarize, of these reforms from a retail investor perspective, what is the relief?
Yeah, I think very clearly the reduction of days from 12 to 6. Few very important things that happen there is, number one, the money does not leave your ASBA account. As a result, you don't suffer any loss of interest, which again may not be very substantial in any case for the retail investor. But more importantly, there isn't the concern of having to follow up on refunds and other things because the money does not go out of your account. There's one more proposal that's very significant that most people seem to have missed out, which is that the money which is collected will remain in a scheduled bank till such time as it's actually used for the purpose that it was stated that it would be used for. This, I think, again, is a far-reaching reform because we've seen far too many promoters sort of shifting the goalpost barely a few months after making an IPO, clearly suggesting that they raised money because there was money there to be raised without really having a clear game plan, which will not happen hereafter.
Very important points raised by Ashok. I want to change gears now and really focus on, the NFO piece of the puzzle. A 5+1 scheme from Tata Mutual Fund. What is it?
Yeah, fairly interesting. I mean, a cleverly and well-packaged issue. Own a piece of India. 5+1 scheme is what they're calling it. It's basically a basket of sectoral funds. You have a banking fund, you have a consumer, which is practically an FMCG fund, you have a digital fund, which is capturing the IT space and related spaces, you have pharma and healthcare, resources and energy, and an infra fund. Now, each one of these is a separate fund. What they're suggesting is that you get a basket of these and you get a piece of India. They're sort of pushing the India growth story. All of which is fine, but when you look at typically when you look at a sectoral fund in portfolio allocation, it is normally an addition to an existing portfolio. You don't go about creating a portfolio out of sectoral funds. You create it out of various other diversified kind of funds. Once a portfolio is created, you could top up based on your risk profile. You could take a certain kind of a sectoral fund. If you wanted a defensive kind of sectoral fund, you could go for a pharma fund. You were an aggressive investor at this point, you could go for an infra fund. So I'm not a great fan of sectoral funds per se. Now, having said that, typically what would prevent a diversified fund from picking each of these sectors? Nothing at all. So I personally think that someone who's a proven performer might be a better bet than these NFOs. Having said that, I think it's a good fund house, the Tata Fund House. They have funds that have really performed and someone willing to take that additional risk can go with it. Otherwise, there are funds. You look at the ICICI approved banking and finance fund in the banking space. They have done well. You look at the SBI FMCG or Pharma and Healthcare Fund. Again, Reliance also has a pharma fund which has done well. So these are proven performers. Rather than go for an NFO just because of the 10 rupee NAV, I would go with a proven performer if I had to. I would reiterate the point that I would prefer a diversified fund which has most of these sectors packaged in any case, rather than having to wait or provide weightage to each of these sectors based on market conditions.
Again, swiftly changing gears, Ashok, because I want to cover a whole set of different subjects with you. We talked about the government's gold schemes, and now we've had a chance to actually sit back and, assess the response. The bonds, I think they've been more or less a hit, if we can call it that. But on the gold monetization scheme, you see a very shaky sort of response. Your thoughts?
Yeah, I think the response has been dismal so far, and that's something we discussed a fortnight ago. It was a good idea, no doubt. It still is a good idea, but the fact is probably the government rushed into it without filling in the holes that were there. And now what they find is that, barring a few retail participants that have come in, and that's a really small number, even given the retail market size, you have the bigger players, the temple boards and religious bodies which hold a lot of gold in India. Now, their concern really is the CPTC is not in place, which is called a Collection and Purity Testing Center. You don't have adequate number of CPTCs in place, so they are pretty averse to handing over their gold without clarity. The ball has been sent to the RBI's court. Now, the RBI would probably come out with some offers. My hunch is that one of the suggestions could be that they move their gold directly to the refineries where CPTCs would be formed and the purity checked. But, that leaves a bit of a bad taste in the mouth. Clearly, they jumped into the fray without any kind of safety net to look into it. But better late than never. At the end of the day, I think there's a simple thing that goes for this scheme, the various gold schemes, is the alternatives are gold minus a charge. This is gold plus some interest for you. If they're able to repackage it, put the safeguards in place, perhaps you might see a pickup. But, one final caveat is, as far as the retail participation goes, I think it's a tough ask, given the kind of attachment Indians have to their gold. But as far as the temple trusts and institutional bodies' gold, I think there is room for success, and that would be, really crucial because that's where most of the gold lies.
Okay, so the point you're making, I mean, a lot of people have talked about the fact that, Indians have an attachment to gold, and that's why, that in a sense explains the poor response to the gold monetization scheme. But when it comes to the larger holding of gold, with religious trusts, with temples, it's about the inadequate infrastructure. And Ashok has underlined the fact that the collection and purity testing centers, referred to as the CPTC, that network is just not large enough. So hence some reluctance, unless there's one close by and one that you can trust, and all of those issues. Ashok, one final thought from you on, we were talking about Sebi's proposed reforms for the IPO market, some of the factors that will, build up confidence within companies to actually go for IPOs. Some have been holding back. The pipeline, in your opinion, quite strong now?
Yeah, I think there is a pipeline, and there is also, a latent pipeline which will surface the minute you see a few positives in the market. And I think Sebi has done its work, and they've done it well in time. I think they've timed it pretty well, assuming GST does get passed, and my hunch is that it will pass in this session. If that happens, I think you are looking at some kind of a revival in the market, and that would translate into somewhat latent IPO market waking up, and you would see a slew of issues in the last quarter of this financial year.
I'm going to leave it at that. Ashok Kumar, Managing Director at LKW Investment Advisors. As always, great to have our fortnightly chat. Look forward to our next appointment.